So if you're watching this video, it's likely that YouTube recommended this video to you. You may have been looking to get involved in Forex for a while, you may have already been involved, but today I'm going to be walking you through how to get involved in Forex trading in 2020, because it's very important. I wish I'd had a video like this when I first started. So what I want to do right now is give you the tips, give you the how-tos, to present you with the best information possible so that when you start your trading journey, you're in the best situation possible to then learn and progress. So let's roll that intro and get straight into today's video.
I know it's gonna hurt, but you're worth fighting for.
So at this stage in time, it's very likely that you have a lot of unanswered questions. So I'm going to do my very best and try and answer a lot of those so that you have a clear foundation towards the end of this video going into your own trading. Now, the first one that I'm sure that's on your mind, because I'm going to try and put myself in your shoes, is where to actually learn trading. So you have four different options in my opinion. You have signals, don't get me started on them, courses, communities, and then you have teaching yourself. So the last three are legitimate in my opinion. The first one is a little bit dodgy, so let me explain that very quickly. I've done a video in this in the past, which I'll link up here for you to check that out as well. So I'm not a big advocate of signals. The reason being is that it creates a lot of dependency on other people. So you're dependent on other people to give you a call, give you a signal to buy or sell a currency pair, which for me doesn't give you that independent skill to back yourself and go all in. So if that company was to go under, if that individual was to stop trading tomorrow, that skill is automatically wiped out. That income source, if it is an income source, is gone. 24 hours, completely vanished. So you just have to bear that in mind. I don't think it's a smart move personally, because I think that it also creates a lot of bad habits that you have to possibly look to unlearn that in the future, should you actually get involved and try and learn it yourself. So overall, I'm not a big advocate. Some people are, some people aren't. I'm not. It is what it is. Number two will be courses. Now there's a lot of good material out there. I'm not affiliated with any courses or communities, so I'm only going to tell you the truth and how I see things, but there's a lot of good courses out there, there's a lot of good material. There wasn't really too much when I started, but there's a lot now. There's a lot of different material you have to go searching for. Then you have communities. Communities for me are a lot better than courses. The reason being is that courses quite often can be a textbook or a notebook or a screen to kind of learn off and test for yourself, which there's nothing wrong with that. But for me, that one-on-one mentorship or that mentorship over time, week on week, is actually very important, because it aids your progression and actually speeds up your trading journey as well. So the reason being is, if you're learning off a mentor or mentors and you see the trades that are taken week on week out, you see the content, you're working through the weekly content as well, you can kind of track that, figure out their thought process of how they analyze and take trades in the live market for themselves as a professional trader, and then try to replicate that as much as possible, but equally try and find your own style within that as well. So I think that week-on-week mentorship is key, and it also allows you to be involved in a community of like-minded people that you can actually bounce ideas off, because trading can be isolating. It's going to be for some people, it's going to be not for others. Like for me, I don't mind it. I quite like, you know, it being isolating to a certain extent as well. I have my own little group circle of traders too, but for me, communities are good because it allows you to bounce ideas, aid that progression. And what I tend to find is that from being involved in communities in the past is that there's almost a pecking order. So what I mean is that once you get involved in a community, you're kind of the lesser experienced member within that. So you tend to ask questions from people who are more experienced, but then over time you'll slowly start to creep up to that level, and then you'll be able to pay that forward to other people, give that back, but then equally get your questions answered from the people who are more experienced than you. And there's kind of a good spiral like that. So I think it's a good combination and a good vibe to get involved with, and I think it can really speed up your progression if you use it in the right way. And last but not least is actually teaching yourself. So I don't think this is a bad option right now from being in a neutral standpoint. But at the same time, if you're going to learn something, I think it's important that whatever industry you're in, you learn from someone who is already in the position that you want to be in. So whether that be trading, whether that be entrepreneurship, whether that be fitness, sports, business, whatever it is, like, it's important that you look up to someone, see how they're doing things, and then look to implement the same things or your own style of things. So I think that courses, communities, actually investing in yourself and being involved in something like that is key. But at the same time, you can teach yourself. There's nothing telling you can't. It may take a little bit more time, but at the same time, you can still do it. Nothing is impossible. You can definitely do it, and I've seen people that have done it. So that will be key. That'll be the 4 things: signals, courses, communities, teaching yourself, make your mind up. I would strongly recommend against the number 1, which is signals, but equally look into the further 3 and see what fits best with you before getting involved. Now, number 2 would be to find a trading style or strategy that fits your style, personality, and or lifestyle. So what I mean by that is, if you're a busy person, you have different business projects, you're working a job, for example, you have kids, a family, it's going to be very hard for you to check the charts, you know, every 15 minutes or every hour or every couple of hours. So you need to find something that resonates with you, that may be more of a style that you have to check once a day or a couple of times a day. So, but equally, if you're free on the charts, being able to, you know, if you're at college or school, or you just have more time around the day and you can check the charts more often, then you can maybe go for a more inactive style that you're, you know, taking a lot more trades, etc., etc. So you kind of have to be aware of that if you're getting involved with courses, communities. Figure out what the style actually is within it. Do you need to be on the charts 24/7, or can you delegate your time a little bit, spend time with family and friends, spend time on different business projects, because that's important to you as well, before then getting involved with that. So that's key. Figure out what style, what strategy you get involved with before you actually commit to it, get involved, and then learn that down the line. So that's key. Now, the next thing that I'm going to recommend is to open up a demo account, but it's very important that you don't stay on demo too long. So what do I mean by that? Well, if you stay on demo account, for me, in my opinion, longer than 3 months, it's going to create a much larger emotional burden on you for when you actually start live. But the reason being is that if you're watching virtual money, you know, profit and loss floating, you kind of get used to that, and then when you start live, it's a big difference, because it's your own money, it's your own capital. There's a lot of emotional aspect from there. You know, for me, I think it was around about 2-3 months after I started trading live. For me, when I remember taking that first trade, I remember exactly where I was, you know, what I was doing, what pair it was. Actually, it was pound dollar, and it turned out to be a loss. And you just remember it because your emotions are quite high. It's the first time doing it. You don't know whether you're doing it right, etc., etc. So I would say demo account is a smart move to learn the strategy a little bit, to learn the interface of the platform a little bit, get used to executing trades confidently and flawlessly, and more so subconsciously as well. But then don't stay in it too long, in the respect that you're fearful of actually going live. Get live as quick as possible. So the quicker you can go live trading, the better it is going to be for you on the emotional aspect, in my opinion. And what I would personally say on that note as well is that I often get the question of how much to start trading with, what amount of capital should I start with. To be completely transparent, it's completely dependent on you and your financial circumstances. So for example, if you're just starting out, if you're quite young, for example, and you don't have a lot of money, £200 could be quite significant to you. So as long as you treat that amount with full commitment and you treat it seriously and you treat it as a business, that is the key. If you're higher up that scope and you have £2,000 or 10k or 20k to play with, use that amount, but use that same psychology, that you treat it seriously and you actually treat it like a business. Because the problems occur if you start with £2,000 but it doesn't mean a lot to you, you have more of a tendency to over risk, over leverage, probably blow your account, which then actually plants those, you know, seeds of doubt in the future if you actually want to get involved legitimately and really try and learn for yourself with correct risk management as well. So start with the amount that's right for you, but make sure you treat it seriously and as a business. Now, the next thing that I'm going to say, which is very, very important, is to actually manage risk correctly. So there's a common rule within trading, just starting out, that 90% of traders blow 90% of their funds in the first 90 days since live trading. Now, you're probably not going to be a part of that figure, am I right? Probably. So how you do that is you manage risk. So whether you risk 1% of your account, 2% of your account, 3% of your account, I wouldn't go personally any more than 3%. As long as you manage risk correctly, that is going to give you a very good foundation into actually progressing within your trading career, journey, whatever word you want to use, because you allow yourself to take a lot of losses, you allow yourself to be in the drawdown, especially in the learning period as well. You're naturally probably going to be in the drawdown for a little while too, just setting realistic expectations for you too as well. So you have to manage risk and put yourself in the best situation possible to sustain that longer term. So for me, it's always been 1%, and I've never really gone above that. And I personally wouldn't suggest going off feeling when it comes to managing risk. So what I've seen people do in the past and I've heard about is people risking 1% on a trade, but then seeing another trade, it looking a lot better, and then risking 3%. The problem that you're doing there is that if you take a loss on that 3%, trade, it may look better, but you're messing with the probability model of trading. You could take a loss and it completely messes your psychology up. So understand that, yes, some trades are going to be better than others, but if it's according to your plan, you need to stick to the same risk paramount every single time to let that probability model play out. Now, the next basic thing you're going to want to do, of course, this should be taught in all courses and communities anyway, so I really want to touch on this quickly, but to backtest the trading strategy itself. Now, without that data of actually understanding if the strategy works, if it has an edge, the probability model itself, you're never going to be confident in the live markets unless you do that. So actually backtesting, recording things like strike rate, win rate, profit loss, all these different data things that you need subconsciously behind the scenes is important for you to progress, because if you don't understand that on a subconscious level, when you get into the live markets, you're going to hesitate. You're going to naturally be like, well, is this a trade that I should take, shouldn't take? Should I avoid this trade? Like, there's going to be so many questions, but if you really get hard on backtesting and really collect that data, then it's going to give you a lot more subconscious confidence to then progress and not hesitate on positions, because you understand that edge playing out and you've seen data to back that up as well. Now, the next thing I want to run by you is actually creating a trading plan. Now, the reason I haven't put this before backtesting is it's important, in my opinion, that you collect the data for yourself within backtesting before you then start to create a trading plan, because you're going to need that data to actually create your own plan. I'm probably going to do a video on this in the future once I've got mine. I'm kind of revamping mine right now since going independent, so I'll let you know that process once I've done it. But for me, what's important within trading plan, number one, is entries. So what entries, what setups do you have within your trading plan to get involved in the market? So, you know, it could be 2 go-to setups, it could be 5, it could be 10, whatever it is that suits you, you have to go with that. And then I put screenshots and criteria with that. So screenshots just help you visually see it, and then obviously criteria to help you tick each box before then get involved in the trade itself. One thing to really bear in mind here is pair behavior, because you can't go onto Euro Dollar and CAD Swiss thinking they're going to perform the exact same when it comes to the same setup. You know, you have to think of it in terms of speaking different languages. You can't go into Spain speaking French. Like, it's the same on Euro Dollar, CAD Swiss, Aussie Dollar, Aussie Kiwi. They're all going to react different to different setups. So Euro Dollar could be high reliable with a certain setup, but then it not really play out on CAD Swiss. Same goes for all different setups. So it's something that you have to play around with, backtest for yourself, and figure out how you want to do things. That's what I'm doing right now. But that's important. The next thing I would say is management. So whether it's a set style of management or whether it's different depending on different circumstances, getting your management style fixed in your plan is key, because the last thing you need is to get involved in a trade, wondering how you're going to manage the trade itself. You need to know this stuff ahead of time before you even get involved in that trade. So that's key. Now, just to finish off this video, I really wanted to lay some expectations your way and give you some things to think about in involved in Forex trading. You know, a lot of people are trying to market things and sell courses, so they don't give you a realistic time frame of how long it's going to take. It completely depends on the strategy you trade, how long you're willing to go at it each day, how hard you're working. There's so many factors that go involved in trading itself. So I wouldn't be predicated on how long it's going to take. What I would say though is that going into trading itself and thinking that you're going to master it within a month, 2 months, 3 months is completely false. So yes, you're going to get the individual that does it every now and then, but what I find, even with those individuals, let's say they become consistent in 3 months, they eventually have to unlearn certain things and tweak things and then go forward again. So there's always going to be a time frame that you take to learn. It's going to be a while. So the best thing that I would say is that go into trading with the mindset that if it takes me a year, if it takes me 2 years, if it takes me 3, 4, 5 years to learn the strategy, learn everything that I need to know about trading, learn to develop myself, because that's a key ingredient that people miss out as well, mastering yourself, becoming consistent, making money in the markets, and then taking on external capital if you want to build your account as well, or you do it your own way, like dependent on you. Have that mindset that if it takes me 5 years, 3 years, 1 year, I'm happy to do that. I'm happy to sacrifice that time frame to go all in on trading to master it, because the worst thing you can do is go into trading thinking it's going to happen in 3 months. 3 months comes around, you're still working 9 to 5, you're still disappointed, you kind of beat yourself up because you're not where you want to be. What tends to happen is that with goals, you can set a time period of how long you're going to think it's going to happen. With trading, it's a little bit different because you can't put a time limit on how long it's going to take to become consistent. Some people it's going to be 6 months, some people it's going to be 8 months, some people it's going to be year, 2 year, 3 years. So you have to go in with that open mind that I'm just going to give it all I have, and if it takes me 3 years, 5 years, at least I'm going to put myself in that position, and then I'll be in a situation where I'm the asset. I can take care of my family, my friends, myself, other people around me, inspire future generations. Like, that's what you have to think about, that bigger picture in mind of where you're going to be 3 years from now, 5 years from now. So just something to think about. But just go away, apply this knowledge, and actually just get the ball rolling. A lot of people just don't start in trading. They say what they want to get involved in this, they say they want to do this, do that. 5 years down the line, they're still in the exact same position. Just get the ball rolling, just put the momentum in place, start doing little things, and then over time you'll gradually start to build up and be where you want to be in no time. So hopefully you've enjoyed this video. Make sure to hit that subscribe button down below, click that notification bell to stay notified so that you do not miss out on any videos, and I'll see you all in the next video. Speak to you all soon.
We'll be right back.